Daily Bit. Today's Monday, April 2nd, and we are going on to Daily Bit number 75. April showers bring Tesla fake news today. So we'll get involved in that. I'm sure some of you have probably already seen this tweet from Elon Musk, which is the reason that we're titling today's paper as such. But before we get into that, again, disclaimer. All information here is for educational purposes only. This is not intended to provide financial advice. I'm not a financial advisor. Consult the financial advisor before investing your money in any financial instrument. Don't consult me and my Daily Bit video streams to figure out how to trade this market because I'm not giving financial advice. Anyways, going on. If you want to subscribe to our newsletter, again, for those who haven't, check out our website, dailybit.news. You can sign up right there, very quick. And for our table of contents today, we have, again, the tweet of the day, which is focused around Tesla. For word on the street, it's tactical oversight. We're looking at a wartime funding issue and how blockchain might be able to be a solution for there. For Where's Blockchain, we're going over to Jesse Lund with IBM and seeing what they're thinking about, what Jesse kind of views as interesting and engaging in the space. For What Else You Should Read today, we'll go through a couple of small articles there. Bulls and Bears, we're going to look at NVIDIA and how they see cryptocurrency mining fueling their business and their GPU sector. And laundering in the Outback, we're looking at a Australian bank and some embezzlement, some money laundering that they got involved with, which they shouldn't have got involved with, but they did, and we'll see how that ties back into cryptocurrencies. And wrapping it up today with Schnorr signatures and kind of what's going on with those, the research and development behind that, and what we can expect to see if they are properly implemented into Bitcoin's blockchain. So now for tweet of the day, again, Elon Musk. This is coming. Some people are wondering if this is tasteless or not. But again, Elon tweeted out the other day, Tesla goes bankrupt, Palo Alto, California. April 1st, despite intense efforts to raise money, including the last-ditch mass sale of Easter eggs, we are sad to report that Tesla has gone completely and totally bankrupt. So bankrupt, you can't believe it. Tesla goes out. So it's in there twice. But basically the point is that Elon, this obviously was an April Fool's joke. It's not taken too well by people that are, I guess, invested in Moody's, because just the other day, that are invested in Tesla, just the other day, Moody's did downgrade their credit rating from B2 to B3. So again, this goes into whether or not Tesla is going to be able to produce, going to be able to meet the targets that Musk is setting, and they're lofty, they're aspirational, they're virtuous, and even if he sets these high goals, just to make sure that when he ultimately does fall short of them, they are much further ahead than other people would be. It's not helping investors and shareholders and creditors for Tesla. So again, whether or not this is going to go over well or be smoothed over, we'll see. But I mean, just hopefully he hits targets and everybody's able to, I guess, come out better from that. But going into word on the street, so again, we're looking at some funding that the Combined Security Transition Command for Afghanistan was authorized to do for the Afghani government. This was initiated in February 2011, but basically they got into an agreement with the Afghan Ministry of Defense and the Ministry of Interior, so two Afghan ministry agencies. And the idea here was that they were going to provide funding to make sure that these organizations and these ministries were going to be self-sustaining, so they would be able to monitor and manage their wartime efforts against the Taliban and other insurgency groups within the Middle East. And in order to do that, each of these departments is going to have to be able to manage their budget on their own, figure out how to plan for their budget, and basically just understand what moving parts are going on in their inventories. So once they either become short of supply of certain goods, they would be able to re-up on them. And again, just understanding how you're going to be able to fund yourself and manage your goods is essential for any organization. And the idea here was that, again, the CSTC was going to fund these groups, and in order to determine how they're going to be funded and what was promised from this funding and what was going to be achieved through this funding, there were these bilateral financial commitment letters that were written by the CSTCA, and within those they were going to outline what specific portions of the budget was going to be funded through their efforts, and then from there each ministry was going to commit to conditions and provisions to make sure that they were going to be able to go through with this funding, say, hey, look, like you gave me $20 to run my lemonade stand. I put $15 to the lemonade stand. We have an excess of $5, and that's basically what we should look forward to, what we should take into account for the future. Obviously, it's not lemonade, but in the grand scheme of things, this is just like, again, a standard budget. What are you putting your money towards? Are you putting your efforts and the appropriate efforts towards that budget? And how are we going to improve over time and kind of fine tune this as we go? So again, and then the goals, of course, were, as we mentioned, budget development, acquisition planning, and procurement, just making sure that they're able to, I guess, train these guys and make sure that they're able to manage everything on their own. But as we found out, the Inspector General of the Department of Defense announced that CSTC officials did not effectively manage and oversee this funding. And when we look at the total funding, it's pretty massive in I guess, a dollar amount. There was $3.1 billion that was committed over the course of 2014 to 2017 to fund the Afghan government, but it turns out that the bilateral financial commitment letters, these letters they weren't able to oversee them and manage them appropriately because of A, inadequate staffing, and B, security risks, security concerns that they saw with managing the program. But it goes deeper than that. It really comes down to the fact that number one, they wanted to be able to manage their inventory. They wanted to manage their budget. They weren't able to do that. They weren't able to maintain an equipment log, so there were vehicles that were given over to the program that weren't properly tracked in the system, so it's most likely that some of those were sent over to the Taliban, taken by insurgency groups, and just fallen into enemy hands. And then again, there was a heavy reliance and dependency upon U.S. assistance right now. One of the things that the government and troops have to deal with over in the Middle East, obviously I'm speculating and just going off of what I've read in papers and publications, but Afghan citizens and Afghan troops are not as trained and not as learned in the arts of inventory management and also just like combat in general. So there's a huge dependency on U.S. troops in order to kind of take the lead here and make sure that they're able to help these Afghani troops become, again, just self-regulating, self-monitoring, and until there's really going to be, until then, until they're really able to take control here, there's going to be this gap, and there's just going to be inefficiencies because there aren't professionals and there aren't people running these groups that you'd like to see in the United States and in other countries with more sophisticated, I guess leadership and employees involved here. So this is the main reason that it failed. But again, looking at what goes on with this funding, it's a matter of accounting versus accountability. If blockchain could be a solution imposed here, it's not a matter of whether or not you implement blockchain. If things are going to be immutable, if there's going to be increased security, more efficiencies throughout the process, that's undeniable. It's very obvious that blockchain does have advantages here. It's a matter of whether or not the information is accurate and trustworthy when it goes into the system. Right now, because there's no internal controls going on here to make sure that there is proper oversight and there is proper management of this system, that's where there's a concern about whether or not the reporting is going to be accurate. So if you're one of these people or officials that are monitoring these funds and distributing these funds and making sure that the funds goes to everything that was outlined in the commitment letters, if you're giving money to a group to make sure that they're able to pay for expenses or pay for whatever is necessary, there's no punishment in place to make sure that if funds aren't paid or delivered for the appropriate item or good or activity, there's no incentive to do so. There's no incentive to report. There's the potential for funds to be used as bribes. So again, if you can't really report that in a system, because obviously you would go down, the group would go down. There would be a huge scandal and controversy, and then again, officials can just pocket excess cash. So again, if there's $20,000 going towards a commitment or a cause, and the price set is paid between the two parties is $15K, an official could potentially pocket that remaining $5,000 and not say a word of it and just tell everybody else that the price was $20K, and that was what was agreed upon. So until there's really, I guess, room for a blockchain solution to be implemented, you're really going to have these systems fixed and make sure that information is trustworthy going in. So again, this is a huge issue for wartime and just any major government body or any major organization that wants to use blockchain. the technology is going to be great, but again, it has to rely. You have to make sure that the information that's being put in and the humans and the people that are running these systems are going to be trustworthy with all the information. So, just something to take in mind. So, for Where's Blockchain? Jesse Long, he is the head of blockchain solutions at IBM. He's doing huge things over there, and he's really become the face of IBM and everything that they're doing with blockchain. And again, they're having all these conversations with platform executives, corporations, and mainly central banks is what we've been seeing with Stellar Lumens and their platform more specifically. But again, a lot of these companies are coming forward into the blockchain cryptocurrency space, and they're saying, how can we use this technology to our advantage? Where can we see efficiencies? Where can we cut down expenses? Where can we grow our revenues using these blockchain systems? So Jesse is, he recently spoke with CoinDesk, I believe, just to get some ideas about how they're looking at the space, what potential there is for blockchain. And again, just three quick text bites on the interview that Jesse had and the conversation they had with them when talking about the growth of blockchain applications in the environment. Lon thinks that, again, quote unquote, what's happening is there's this emergence of a new segment that could actually be one of the biggest segments that is a permission but public blockchain network typology. So again, he's talking about how blockchain really could be this industry that grows up to be a gigantic sector, a really huge market that right now it's really, I guess, undersolicited by these companies because, again, nobody really knows what they want right now. They're kind of getting involved. They're saying, oh, yeah, maybe blockchain is great for me. But, again, it's just because it's presumed to be correct. Just because it's presumed to have these advantages doesn't necessarily mean that each company is going to be using blockchain for the same specific use. So you kind of got to do your homework before, and this is what we've been saying time and time again. These companies have to look into the technology, look into where they have problems, where they have issues, and then kind of sit down together and say, okay, like where can we actually take advantage of this stuff? Do we want to use a permission public blockchain? Do we want to use a private blockchain? Like what type of blockchain is going to fit our needs best? And then they can go from there and look at projects and kind of determine where they could see a partnership coming forward and stuff like that. With central banks, Jesse thinks that he'll expect sometime this year a central bank at least putting its toes in the water to issue a digital denomination of their fiat currency into the wild. And this is something that we've been seeing again. Obviously, the Petro isn't the best example because that's an absolute nightmare. But for legitimate central banks and central banks that have a good standing in their country and with the rest of the world, there's a very good chance that, at least Jesse thinks, that there is going to be a fiat currency issued on a blockchain. And again, that's all going to lead to increased transaction speeds, more liquidity, more availability of the currency in the global market compared to the current central banking system where once it hits the weekend, you're kind of stuck. You can't really use your funds as freely as you would be able to if it's issued on a blockchain. So again, it's all these efficiencies, and he's really predicting that we're going to see some movement here as 2018 goes on. And as for the demand for commodity tokens such as Bitcoin, so here we're thinking of gold bullion. And again, he's noticing, and IBM is noticing, that they're seeing a move towards the issuance of tokens that have a higher velocity, so more transfers and more kind of exchange between parties. For example, a claim on gold that's sitting in a vault. So again, the idea that Bitcoin is a digital gold comes from the fact that it has the same properties as a block of gold that's sitting in a vault that can't really be moved. But again, there are many more advantages to using Bitcoin than there are to gold. You can break up gold, you can break up Bitcoin. You can't necessarily break up a block of gold and give it to two people and say now it's split in half. Bitcoin, you can have fractional ownership, so you don't necessarily have to have one Bitcoin. You can own 0.1 Bitcoin, you can own 0.05 Bitcoin, you can own 1.2 Bitcoin. It's dividable and it's divisible. You can't do the same with gold. It's much more difficult to transfer gold, whereas Bitcoin, again, you plug in the receiving party's address and you can send the Bitcoin. And again, it's all done across the block. It's all done across the blockchain network. It's secure. It's immutable. You understand what is going on, who owns everything who owns everything at each time. Gold isn't as accessible, and again, it's going to be harder to exchange between parties. So whether or not everything kind of comes to light and whether or not these trends continue, we'll see. But again, IBM is going to be a huge, I guess, reliable source to understand where these trends are going and what's kind of taking shape in the industry as things move forward. Now, for what else you should read today, the National Bank of Kazakhstan, they recently came out. They're taking a hard stance on cryptocurrencies. They're considering potentially banning Bitcoin and other cryptos since there isn't really much regulation around the space. Policymakers on Capitol Hill, they're facing a really steep learning curve with cryptocurrencies, which isn't really much of a surprise. I mean, every other company is doing the same thing. Unless you're really involved in the space every single day, and myself included, I'm reading as much as I can every single day and also trying to juggle the other things that we have to do with the paper alongside everything. But still, I'm learning things every day. There's a lot I still have left to learn. So again, it makes sense that every other policymaker and person making laws is going to be struggling to do the same, and that makes it difficult when you're making laws. If you really don't know what you're talking about the actual industry, it's going to be hard to kind of keep pace with all the innovation going on. So I think policymakers, and we're seeing that policymakers are really kind of just working to catch up with everything. So that's where it's going to probably move slower, faster. Things are going to take shape a little slower and than we'd like, but again, that's going to be more helpful just because in the end of the day, we want to make sure that regulation isn't too constricting on the environment and that people are going to be able to innovate within appropriate frameworks for the industry. For Telegram, they raised $850 million about a week, 2 weeks ago for the first half of their ICO funding. They successfully raised another $850 million, so now in total there's $1.7 billion funded towards this ICO. It's the most of all time, which is really astounding. From the initial funding round, the multiple is already up probably 3 to 4x, I'd say, from the initial pricing. They did crank up the pricing and the cost per share of a gram. 1 gram is the token. Grams are the tokens that are being issued for in the Telegram ICO. But again, they were cranked up in the second round of the offering. So again, whether or not Telegram's going to be successful, we'll see. I personally have my doubts because it is going to be centralized, and if we're really going to put our support and backing behind these decentralized projects and really take advantage of the public blockchain, then you can't have about half of the token supply being held up by Telegram and these companies. So it really doesn't make sense in that regard. But again, I really haven't done too much reading into Telegram, so obviously there's take that for granted and take that with a grain of salt. So I mean, we'll see how the project goes. I definitely do want to do some reading into that as well on a deeper level. Cisco, they filed a patent for a blockchain-driven group communication system. So here, again, I haven't really read into this much, but there's a lot of companies that are rolling out these patents because they have to get this on paper in order for them to start doing R&D and make sure that they retain the rights to this technology once it is ultimately produced. And for the wackier story of the day, the McAfee effect, this is something that we talked about months ago when John McAfee started doing tweets of the day on coins, on these random cryptocurrency projects that not many people really found out about or knew about, but the second that he would promote them, they would go up 20% within minutes, even 15 seconds or so. And, I mean, he's now coined the name for his own. It's called the McAfee effect. But he's charging $105,000 a tweet to promote whatever it is, your project, your idea, your venture, your group. It's insanity. But at the same time, when you look at the numbers behind it, it's McAfee and his team are saying that, look, this is the best bang for your buck in the market. He has a huge number of followers. McAfee right now, I don't believe he's at 100,000 followers. I don't think he's at 1 million followers yet. But before the McAfee effect and these daily coin pumps, I think he was somewhere around 200 to 300,000 followers on Twitter. That number is now over 700,000. So again, he has a huge engagement with his followers on Twitter. So if he says something and suggests for people to get involved in the project, then there's going to be a lot of traffic towards that group. So again, whether or not it's worth the money, I'm not really sure. We definitely aren't going to be putting funds towards that, and I guess we'll see on his Twitter feed what projects are taking advantage of the McAfee effect and if it's legitimate. And again, I think this is legal. I'm not too sure if this is actually if he can get in trouble for this. I'm sure that I doubt there really is any legal risk here because the fact that he's promoting and saying, look, if you pay me $105,000, I will promote your project. So I mean, if a business contract behind it, I'm sure it's fine. But I was initially concerned that he could potentially go to jail and kind of do this because it's all, I guess, again, it goes back to whether or not the information is false or misleading at the end of the day. Moving forward, Bulls and Bears. We'll run through this pretty quickly. NVIDIA's CEO, Jensen Huang, he was on CNBC's, well, he was on Jim Cramer's Fast Money the other day, talking about how cryptocurrency mining is here to stay, blockchain is here to stay, and because of that, their GPU sales are going to be driven by a growing interest in cryptocurrency mining. Whether or not that's going to be a main driver or core driver for growth, Huang doesn't think that that's going to be the case. Sure, the cryptocurrency mining chips for GPUs are going to definitely, their demand is definitely going to be correlated to the need for people to mine these cryptocurrencies. But again, at the end of the day, for long-term growth, he really thinks that it's going to come down to four other key product areas, which are video games, professional graphics, visualizations. So you're looking at movies such as Avatar, Star Wars, anything else that really requires these special effects. They're using these GPU chips as well. Data centers where, these software kits and these again, just like they're taking advantage of these software, of these chips, and these are going to be presumably driving the technology and driving the systems behind these larger companies. So having these data centers operate is going to be a huge driver of growth. And then their autonomous vehicle lines. So again, using this technology to boost AI and fuel AI, again, making them more efficient, making them more effective in whatever they do. So again, this is going to probably, I'd expect since we're looking at Uber, we're looking at all these self-driving cars that are really on the market right now. So presumably they're going to need to have these AI systems to make sure that they are going to run according to plan. So again, NVIDIA is going to have an advantage here. And that's where, when you look at the market size of each of these four primary growth areas are a lot bigger than the market for cryptocurrency miners right now. Whether or not that stays the same, we'll see. But again, right now, this is where most of the money's coming from, just because, again, the market, the dollars behind each of these business areas is going to be higher than cryptocurrency miners. And month over month, NVIDIA isn't doing that great. Again, it goes back to what's been happening with the market. Cryptocurrencies have been kind of sluggish recently. The markets have been sliding for about 3 months now. The first quarter hasn't been too great. I believe Bitcoin was down around 70% overall. But again, that's just short-term. Long-term, many people are confident, myself included, that the market is going to recover ultimately. So again, as that happens, we could see a change in NVIDIA potentially going to the upside. But again, this is also just looking at the larger stock market in general. It really hasn't been doing too great. So again, there's this kind of tech bubble that's presumed to be popping right now. Whether or not that happens, we'll see. But again, NVIDIA would be dragged down with that because they are in the market for creating this software and this tech stuff for all these companies. So again, and their tech has been super. It's become much more efficient and much more, I guess, advanced in the past 5 years. They're able to. Their software is able to lead to AI machine learning, which is 500 times faster than 5 years ago. So again, there's clearly advantages that are being reaped here with their AI and their software. So obviously there's a market for that. And again, it's going to go towards these four areas more so than cryptocurrency mining. Moving on, laundering in the Outback, we have the Commonwealth Bank of Australia. A couple employees at this bank, they got involved with a mafia kingpin who was laundering money using these loans that he was given by the bank. Essentially, millions of dollars of loans, 14 loans total, up to $15 plus million. And the mafia boss was buying these properties and using that to help kind of wash his money and get that out of the system. But again, there was a due diligence process that was outlined when these loans were being administered, and these employees basically just looked the other way and didn't do the standard due diligence, which in hindsight and also foresight is a major security risk, because if they were approached by any of these parties of interest saying, hey, look, I want to launder my money, I want to find a way to make sure that it's clean, like if you can do these loans for me, and there's no actual record of this due diligence being performed and there's no confirmation in a system that shows that it was actually completed, then there's a huge security there is a huge security concern, and that's where we're going to find a lot of these banks get involved with money laundering, get involved with, well, A, just the wrong people, and B, it really just shows that there has to be a lot of improvements, I guess, down the road to make sure that there isn't this risk for these companies when they're hiring these employees and when they're doing their business. So how does this all tie in to cryptocurrencies? In February 2018, the CBA announced that they're going to place a ban on the purchase of cryptocurrencies with credit cards. However, that's really nothing new. Other banks and other corporations are doing the same thing. There's really just a risk of taking on too much debt to purchase cryptocurrencies. Again, if you want to use your debit card, if you want to use another account, that's totally fine. But again, there's cryptocurrencies can't be used with credit cards. And again, if they want to, it's interesting because obviously there's a risk here, but people shouldn't forget that there also are major risks that just go on within the day-to-day operations of businesses that don't even relate to cryptocurrencies. I mean, there's money laundering that goes on with standard fiat currencies, and it still happens, and people still get away from it. If there's a risk or concern of money laundering with cryptocurrencies, and people think that it only happens with virtual currencies, I mean, wake up. It's clearly going on in other areas too, and cryptocurrencies aren't the only area where money laundering takes place. Sure, it definitely does take place, but the fact that you can also track everything on the blockchain makes it easier to manage. And also, just looking at this example with the Commonwealth Bank, if there's no system in place or there's no ledger in place to make sure that this is kind of recorded, it's much easier to launder money through traditional routes, through physical cash, as we can see. So again, just an interesting thing. It doesn't really have this, it's not this like groundbreaking, like quaking thing that's going on in the industry, but again, just showing that there's money laundering going on everywhere. No fiat currency, no cryptocurrency is going to eliminate bad actors. Bad actors are going to get involved in anything that they see fit. Anything that can make them money and help them embezzle their funds, they're going to do it. So again, it's just a matter of like what option is out there and which one is going to help them accomplish their goals most effectively. Now, wrapping up with education, we have Schnorr signatures. So within every Bitcoin transaction, within every transaction on the blockchain, there's a signature that goes on. There's a John Hancock. Everybody has to confirm that something took place. And right now, the current system that's used, or the current algorithm that is used for Bitcoin for signatures, is what's known as elliptic curve digital signing algorithm, the ECDSA. I know nothing about this. I have to read more into the algorithm, but basically the gist of what I've figured out here with ECDSA is that there's one signature per address involved in a transaction. So the way this ties into the current Bitcoin blockchain is that if you have something called multisig, and it's an enhanced security feature where, let's say, you wanted to make sure that you had more security around your transactions, so you would require, let's say, 4 people to sign off on your signature, make sure that it was legitimate, make sure that everybody is kind of on board here, and it just gives you extra security. It's like a teacher giving their students back their exams and saying, okay, you have to go home and have your mom and dad sign this test so I know that they actually looked at it and they know it's legit. I mean, you can try to forge it with one signature and you can potentially get away with it, but once they say, all right, you have to have your mom sign it, you have to have your dad sign it, you have to have your uncle, your cousin, your grandma, your grandma's friend, like everybody, like once there's more parties involved signing off, it becomes harder to get away with sending out, I guess, illegitimate transactions. So again, there's one signature per address, and there's a picture on the other slide that we'll get to that explains this more clearly. But again, in terms of the length of the transaction, it's a maximum of 75 bytes, usually 71 to 73 with ECDSA. Schnorr signatures, they move the signature part of the transaction into the witness part. It's another area of the transaction. I'm not entirely sure, again, what the technical components are. I just know that it's moved into the witness part, and then the maximum length from that means that it's only each signature is only going to be a maximum of 64 bytes compared to a maximum of 75 bytes. So again, there's a couple of efficiencies here, and by reducing the size of the signature, there's a larger block capacity. You can have more transactions involved, or included within each block within the 10-minute time window. There's smaller transaction fees because there's, again, more efficiency, more transactions can go through with every block, so the expenses are lower. And there's increased privacy. So whereas you needed to have multiple signatures sign off within the current method, with Schnorr signatures, is if you're able to use one signature for to represent all of the addresses that are signing off in this transaction, you don't necessarily know who is signing off on what transaction. You just know that there's one signature that's within all of these public addresses that is confirming that this transaction can go through. So again, it's just providing a little more concealment for the user. And when we look at how today's signatures currently work, there's a sender and there's a receiver. But right now, if there's a number of addresses that are all going into the receiver, you need one signature for each of those. Whereas with Schnorr signatures, there's one address or there's one signature for all of the addresses involved in each of the transactions. So again, it's pretty clear from a visual perspective what's going on here. If you want to get a more in-depth conversation and explanation of Schnorr signatures, definitely check out this Medium article. Super helpful for me in figuring this out and writing this up. But again, those are Schnorr signatures. They're still being researched. Developers have been looking into them since 2012, so it's going to be a while until they're actually going to be released and actually used. But once that's possible, if those ever do come to light, it's going to be a great scaling solution for Bitcoin. It's going to cut down on block sizes. Again, it's going to on transaction sizes. It's going to increase block capacity, and ultimately help scale blockchain for wider and greater adoption down the road. So that's it, guys. Thanks again for tuning in. Again, if you want to visit our website, check out thedailybit.news. Follow our social accounts on Twitter, LinkedIn, Medium, Facebook. But that's all for today. Thank you guys so much again for following us, watching our videos. We really appreciate it as always. And again, that's all for today. And share with your friends. And until then, I'll see you tomorrow. All right. Peace out, guys. Bye.